There are two really important dates right around the corner that are going to have significant impacts on financial markets in the month of September. So in this video, I'm going to go over what those two dates are. I'm also going to talk about technicals, on-chain metrics, the macro economy, and give you a little idea of how I'm setting myself up. But realize I'm not your financial advisor, your tax attorney, or your Instacart shopper. You should know that by now. If you don't, go ahead and pause this video and read the disclaimer on your screen. And also, if you get value from this video, I would greatly appreciate you hitting the like button and sharing it with someone that would also get value. So first and foremost, in the macro economy, we are in a very tricky situation. Okay, we still have inflation that is really high, over 8%. The Fed recently has said at their Jackson Hole meeting that they are bringing it down to 2% at all costs. They don't even care if it completely damages unemployment, if it damages businesses. You know, the average person in America is likely to see suffering. I mean, they use a lot of really bearish words during that meeting, and it is a little bit worrisome to try to bring inflation down 80%. Although I think it is the right thing to do, I think it could cause markets to come down a bit. So we're in this kind of weird situation. We've also got really low unemployment, and I'll talk about that here in a second as well. Okay, midterm elections are also right around the corner in the month of November. Democrats are incentivized to try to prop up the markets to make sure there's not a massive sell-off before then, to try to still hold a lot of the seats. But unfortunately, at least for them, it seems like Republicans are going to start to take over certain parts of the House and Senate during the midterm. So we'll see if that actually happens, but that is coming right around the corner in the month of November. Now, we're going to be continually watching the unemployment numbers because the Fed is trying to balance between unemployment and high inflation. So they don't want to move one lever too fast or the other, but they definitely are. The number one priority for them is to bring down inflation. Like I just mentioned, they're trying to bring it down to 2%. So that's over an 80% drop from where it is currently right now. And unemployment is historically low. So they have kind of alluded to they're okay with unemployment coming slightly up, and they actually do expect unemployment to come up. So that means more people are going to lose more jobs, and more people in the U.S. at least are going to be unemployed. So we'll see if that actually happens. But that is the overall sentiment, and we are at historical lows. So I think the Fed is completely okay with lowering inflation at the cost of increasing unemployment, so they can have a little bit more stability. But they don't want the lever to move in the complete opposite direction. So they are trying to be careful around it, or at least that's what Mr. Powell is saying. Okay, so that big meeting last Friday at Jackson Hole is a very famous meeting. This had a significant impact. I mean, we're talking about huge sell-offs in financial markets last Friday because of the terminology that Jerome Powell used during that meeting. He seemed very, very bearish and hawkish on the overall market because he is so in tune with bringing down inflation, which is a little bit worrisome for financial markets, because if we continually hike rates, what we're doing is we're making debt more expensive. And when we make debt more expensive, people borrow less money. When they borrow less money, they spend less money. Businesses make less money. Less people get employed. There's less money circulating around the U.S. economy, which typically leads to a recession. So that is what people are worried about, and ultimately usually a sell-off in financial markets as well. So as you can see, unemployment is down at 3.5%, which is historically very, very low. And it seems like they are okay with that coming up. So here's the first most important date. September 2nd is when the next employment numbers come out. And so it should be right around 8:30 on September 2nd is when we're going to get a good idea of what the unemployment rate is. And again, actually, some people say that if this number comes up, that's actually bullish for financial markets. It's not bearish. So, less people having jobs is actually bullish for financial markets, because the Fed is now saying, okay, well, this lever has started to come back up, which, if unemployment starts to come back up, the Fed is less incentivized to increase rates into the future. So if we see employment come back up, it actually could be a bullish sign for financial markets. Now, the second thing is the CPI data. So this is the second date that we're keeping an eye on, which is September 13th. So we obviously want to see inflation come down. Okay, sitting over above 8% is really not good for the overall economy. economy and for financial markets, because if inflation continually stays high, they're going to keep hiking, which again will slow down the economy, slow down borrowing, slow down spending, and slow down consumer confidence. So we want to see inflation coming down. Again, it is on a good trend. We went from over 9% down to the mid 8% range, and we're hoping to get below 7%. I think below 8%. If we can get below 8%, in the 7.6 to 7.8% range, I think that would be really quite bullish for financial markets. So let's hope that the CPI is further coming down this month in September, which again is more of a lagging, statistic because it's for the previous month. So we'll see on September 13th. That should have a significant impact as well on what the Fed is doing with their quantitative tightening. On-chain metrics, a lot of things are still showing bottoming signs. And a lot of the on-chain stuff that we use is more on a macro scale. So this is like macro tops and bottoms. We're not talking about, hey, what indicator is flashing on the on-chain metrics that shows that we're going to rip to new all-time highs in the next week. We're talking about longer term metrics that have more of a significant impact over longer periods of time. We're talking, 1, 2, 3, 4, 5 plus years. So first and foremost, we also saw a big print of the hash ribbons, which we talked about a few hours after this happened, which historically, the average appreciation is really quite significant for the hash ribbons. I think it's over 100%. If you go watch one of my previous videos, I just talked about this. It's a very significant appreciation that you typically have, but usually the hash ribbons, the bounce actually, the bottom is actually 2 to 4 weeks before you actually start to see that significant appreciation after you actually get this indicator that shows the buy signal. But you can clearly see by this blue circle that it flashed a buy signal, which shows that miners on the Bitcoin network are starting to come back onto the network. And typically the hash rate and difficulty has a significant impact on the price. So usually we'll see price go up after the difficulty in the total terahash on the Bitcoin mining network actually goes up. So that is a bullish sign for Bitcoin over the next 6 to 12 months. The Z-score as well, this has showed a bottoming sign as well. If you look, typically you see 2 to 3 touches into that green zone, which just really means that it's undervalued is really what the Z-score is showing. This is one of my favorite on-chain metrics, and we are into our second touch now, which again is there's usually 2 to 3 touches into the bottom of the Z-score. So we'll see if we get a third touch this year, but that is an overall long-term metric that is showing more that we're much closer to a bottom. It doesn't mean we're at the exact dollar bottom of Bitcoin, but it does mean that we're a lot closer to a bottom than we are to a top. Okay. On the technical standpoint, there's a lot of signs showing a lot of bearish momentum in the shorter term, especially, you've got stock market looking quite bearish. You got all the major tech companies looking quite bearish. You've got, ETH and many other altcoins rejecting off the 21 week moving average. We've also got BTC breaking down through another bear flag. So this is what I'm talking about. The S&P 500 hitting a significant point of resistance, which is the third point here, rejecting off the 200-day moving average. And we're starting to see more bearish price action, which is not surprising. We talked about this even before we hit the 200-day moving average. So if you get value from actually getting updated right when these key things are happening, I would greatly appreciate you hitting the subscribe button. It's completely free, and I think you'll get a lot of value from listening to our content because we're continually improving and continually getting better on this channel. So I appreciate all your support, but we did have this significant rejection and a rejection off the 200-day moving average during bearish sentiment at a really key level of resistance while the Fed is hiking is really quite bearish. So I wouldn't be surprised if we trade to the bottom of this zone, which would put us in the 330s on SPY. All right. On tech stocks, this is Apple actually entered a short on Apple about last week. Same thing. We had a rejection off a really key level of resistance, and now we're trading below the 200-day moving average. We saw this not only on Apple, but also on Amazon, Nvidia, a lot of other major tech stocks as well. Like I was mentioning, the 21-week moving average, ETH had a really strong rejection off the 21-week moving average. It's also at a really key level of resistance as well. And we saw this happen as well with BNB, Atom, and Aave. What I will say, some of the strongest altcoins, specifically BNB, shout out to Binance Coin, it is hitting all-time highs relative to Bitcoin. So BNB has been an absolute beast. Another, two other really strong altcoins, or at least, two of them. Atom has been extremely strong over the past few weeks, and also Matic has been extremely strong. And the reason why that matters is not to go into your time machine and hop back into a month ago and go buy them, but it's to realize that the coins that are really strong during bear markets, especially relative to Bitcoin, when we do come out of this bear market, those coins are likely to be very, very strong, because obviously there's a lot more conviction in them. And I think really the reason is because there's more fundamental value in those projects. They've got a lot of other major partnerships. We're actually going to talk about one at the end of this video that are really extremely significant. So those are the types of things that we look for. Hey, what actually has real adoption, real utility, fundamental value, great teams? You need all those things to be, a long-lasting, strong project, especially during a bear market. And those have been leading this bear market, at least over the past few months. On the BTC daily chart, we did break through once again the third bear flag in a row. We traded into the fourth bear flag, which is kind of in the middle of the screen, which was a really key level of significant volume, as you can see from those yellow bars. That was where the most amount of volume was traded, and we did break below that, which is definitely a pretty bearish sign. Okay. Overall, summary in the short term, definitely looking quite bearish. It's really, really important to see what's going to happen in these meetings of September, because we think that's going to have a significant impact on the sentiment of the market. I think it's going to have a significant impact on what markets do in September, and then also, to finish out the rest of the year. So we aren't going to be surprised if we see Bitcoin trade down to the 14, 15, 16K range. I think that's really quite likely. I think a lot of people think that is too. I personally don't think 10K is really that likely. A lot of people are going to keep calling for 10K, but once we get to 15K, they're going to call for 10K. And if we did get to 10K, they're going to call for 8K, and then they're going to call for 3K. And so I think it's pretty unlikely, but I think the odds or the probability are in the favor of a move lower down to the mid-teens for Bitcoin. But I don't know if that's going to happen today or in 6 months from now. But I think the odds are in the probability of that. I would not be surprised. But to be honest, in the shorter term, I wouldn't be surprised if Bitcoin kind of trades at this really key level, because we're at 20K right now. So if you look back in history, we had really strong resistance in 2017 at $20,000. So I think it's very likely that Bitcoin kind of chops along this previous resistance that is now flipped into support. If you know anything about technicals, a lot of the times previous resistance flips into support, and that's exactly what we're seeing right now. So I wouldn't be surprised if we trade right around the 20K range, for at least the next couple of weeks, if not month or two. So big time partnership, big time partnership for Binance. They partner with MasterCard. So they are now opening up to over 90 million stores in Argentina and other countries to actually open up payments through cryptocurrency. So this is a really, really big partnership that Binance just made with MasterCard, which is obviously one of the largest credit card companies in the entire world, which there's rumors that they're also talking with Visa. But this means that you can literally buy crypto, you can store it on like a debit card, and you can swipe that debit card, and what it does is it'll sell your crypto into fiat and pay the merchant. So now you can actually hold cryptocurrency instead of holding fiat currency that continually lose value over long periods of time. You could hold BNB, you could hold Bitcoin, you could hold ETH, and it'll take that BNB, Bitcoin, ETH and convert it for the ultimate merchant that wants fiat currency likely. And who knows, maybe in the future, these merchants and vendors actually want to be paid in crypto. We'll see if that happens. But right now, this is a really, really big partnership that Binance just made with MasterCard. So it just further showing the adoption of cryptocurrency. All this stuff is really important. I talk about this a lot. Hey, what we want to see is we want to see fundamentals growing, and we want to see on a technical level, we want to see really bearish price action on the technical level, because that just means whenever things do turn around, we've got all of that utility and fundamentals that have been building this entire entire bear market, and that'll carry us much, much higher into the future. So if you got value from this video, I greatly appreciate you hitting the like button. We also have a community that we share a lot of these key, first of all, ranges on the technical, the macro economy, and on-chain metrics with our community in order to provide them more alpha and give them more context into what is actually happening in the real world and in the market. So if you think you get value, there's some links in the description below. We also have a trading challenge that we are just now going to be finishing in about 4 hours from now. So we'll see who wins that. We'll announce that next week. And again, if you got the value from this video, I greatly appreciate you supporting it and supporting this channel, and share it to someone that would also get value. Thank you so much for watching, and I'll see you here on this next video.